Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. Now, we are facing a major potential bubble burst in the Canadian real estate market, so I'm just going to go over a few factoids before we get to John, as he will explain in detail what exactly is going on here. So, starting off, in Vancouver, there are 66,719 empty mansions and counting. Vancouver home sales have crashed more than 40%, while Toronto home prices have soared more than 22%. Sales of detached houses, condos, and townhomes fell to 2,425 transactions, so the home sales are down 41.9% when compared with the 4,172 deals last year, a record high for the month of February. 7.7% under the 10-year February average, by the way. Now, last August, the BC government implemented a 15% tax on foreign home buyers in the Vancouver region, contributing to the real estate market slowdown, which we'll get into in a bit as well. Now, moving on to Toronto. Single-family detached houses are reaching prices of at least $1 million, almost doubling this year in the Greater Toronto Area. The Globe and Mail reported on the new study by Sotheby's International Realty Canada that the Greater Toronto Area saw 2,876 sales of detached properties of $1 million or more in January and February, compared with 1,548 in the first 2 months of 2016. Now, John, can you clarify to our viewers what exactly is causing all of this and all this insanity in the Canadian real estate market? Because I think a lot of people are confused as per what exactly is happening. A lot of people have talked about this issue for a long time, but that heat is really starting to build up, and that balloon, that bubble, is going to explode at some point in the near future. Can you go into this?
Of course it will. Any real estate bubble is always going to burst. You're never going to see anything going straight up in eternity. That's rule number one.
Though a lot of them claim that it will. Yeah. That's the problem with a lot of these real estate investors. They're trying to tell people. It
gets to a point that, they are just becoming, they believe in this whole thing. That it's not gonna crash, Mm-hmm. It's just the mentality almost. It's their paradigm that real estate is never gonna crash, because here in Winnipeg, where we are, for example, in the last 30 years, we only see 2 crashes. And those crashes, it was only 1 year, and it went up more the next year. So, like here, for example, we never really seen a downturn at all. I seen it. My parents saw it in Oslo, in Norway. House prices plummeted by 60-70% some places. So they seen it, and of course with the housing prices plummeting, you got to remember, if you even had an 80% loan to value, so that means that you borrowed 80% of the value of your home. Yeah. If, for example, it drops, let's say 40% now, well, now you're in negative equity right away, which means that you have the value of your home is worth less than the actual money you borrowed against your home.
And we're going to go into negative equity in a minute too, as well, because there are some examples of big real estate investors trying to fool people into negative equity. But we'll go into that in a second.
But let's get back to the markets and what's going on currently, because what you're seeing is a move where you see assets. People are chasing around trying to make money because it's very hard here in Canada. We're in a recession. So we are really fighting and struggling to, go and invest in something. And of course, what has always been used as a scapegoat to, try to create wealth for people here in Canada has been the real estate industry. I talk about that in my upcoming book that we're going to talk about in very soon here on the channel.
Absolutely.
But what you got to understand when it comes to the real estate here in Canada, even if you see like the prices going up, let's say to $1 million for a single family home, what you got to understand is most of the times it's just all the money, the free money that the Federal, not the Federal Reserve, the Central Bank of Canada have created, because, well, what they do is they don't really necessarily create it, but they put down the interest rate to 0.5%, and then what happens is everybody flying to the markets because it's so cheap to borrow money, and that's what they want, because they want people to feel wealthy, feel that wealth by the increase of their home.
But it's not going to be a perpetual, eternal
No,
rise.
and this is very important. This is where, the guy that actually got me into looking at economics and history and understanding all this, Robert Kiyosaki, he says it the best: your house is not an asset. And people scream, and you could they would literally start crying when he says that. And they would say, no, you're a liar, because people believe that their house is an asset. Well, the only time your house is an asset is when you actually are getting more income from your house on a monthly basis, more cash flow than you are getting, than you have to pay for all the expenses, the mortgage, the taxes, all the utilities and so on.
So it can be a temporary asset, but very temporary, and it's very risky.
It's only an asset when you actually sell it. So don't believe that, people might, ride this wave and it's like, oh my goodness, I feel so rich right now. But then the problem is they use their houses and ATMs simultaneously. And then, of course, they're lying, right at, the edge of loan to values on that house. So just a sudden little drop even in the markets are going to, put them in and make a bubble like the United States almost looks like a fun time, because that was only $13 billion. Like, what's going to happen here in Canada as well? I think it might be huge. We haven't really seen too much, and the problem here is we don't really know too much about the banking system and what they're doing and what they're up to. Or they're very secret about all their business that they're doing. Who knows how much mortgage-backed securities we have here in Canada on these homes.
Debt obligations.
All of these packaging of different loans. And subprime loans, we know that there's, of course, a lot of these loans are looked at as subprimes as well. Because when you get this bubble, what's going to happen is they max out on people to borrow to, and then they're going to start borrowing to people that can't really afford it. And that's when you get that effect that will drag everything down.
Well, let's kind of go into market manipulation and how it affects this bubble, and how a lot of this is due to that over-the-top manipulation from the government.
Well, it started first of all with the central bank, number one, the 0.5% interest rate that we currently have. And then secondly, it starts with credits that they give you to buy a house when you can't afford it. It's not as bad here in Canada as it is with the buy-to-let and all these programs that they have in England, which is basically the government giving you 20-30% of your actual mortgage to buy a home, which is insanity. Of course, you have the Canada Mortgage and Housing Corporation that insures all the loan, like the Fannie Mae and Freddie Mac in the United States. That, of course, is another thing. They insure people that, are not the prime buyers that actually can really afford houses a lot of times. Like I was at one point, they looked at me. I had to get the insurance from the CMHC, basically, in order to be able to afford. Now, of course, I live quite comfortably. I'm very happy about that. I'm very, very happy about that, because, you got to know what, you can afford from the debt to income ratio that you have, which is, tremendous. I see some people, and this is really talking about the real estate and what they're doing here with manipulation and so on. These people that I've seen moving in, like, we're not talking about Toronto here, we're talking about Winnipeg. They're moving in, they have maybe $20,000-$30,000 less than me and my wife in incomes, and they go and buy massive houses, $500,000-$600,000 houses. Like, they're right at the edge with how much debt they have, of course, and then they have nice cars in their driveway. So people are mortgaged and indebted up to their their swing shrang,
whatever that means.
I stole it from Max Kaiser, by the way. Oh, okay. He always says that. I think it means something pretty bad. Anyways, but imagine. People have indebted themselves, and they use all this debt because that extends what they can buy. It's like debt creates this middle class that we've been seeing, the massive boom in the middle class. Because if you didn't have debt, if you couldn't borrow debt, like out of a monetary system, there would be no possibility to really grow this middle class into the huge extent that it was. Because if you look at all the middle class, they have a massive amount of debt, and that's what's driving the real estate bubbles and so on.
Well, before I get into my next few factoids, John, you have a chart there. Can you tell our viewers about this chart and what it means?
Yeah, this chart here is a very quick chart from Toronto, Greater Toronto area, and it shows all the way back from 2004 till current. So now this is mind-boggling. Like condos that it shows is not, they haven't gained too crazy of overvaluation, but they have almost doubled, by the way, which is quite substantial. It's 100% increase. So it means that it would have been almost 100% inflation over the period of time of 13 years. So it means that your money got devalued like by half over 13 years. And of course, the ridiculous number here comes when we look at the number for the single-family homes in Toronto. Like, look at this mind-boggling number. Back in 2004, it was hovering around 325, 330,000. I don't see the exact number. But today, the number is insane. It's $995,000. And that's actually 300% increase, 3 times. That is an insane amount of valuation of a house market. 300% over 13 years.
That looks worse than what we saw in Detroit leading up to the bubble burst.
This is insane. So let's do quick math here. I'm actually doing it as we speak. So it's 300 divided by 13. So we're looking at an average over those years, 23% increase over those years, on an average every year in housing prices. That's insane.
That's absolutely unbelievable. And of course, we have to kind of get into the fact that when the markets are manipulated, we have to understand that this is all artificial. The markets are artificial. The monetary system is artificial, which we talk about all the time as well. And I just wanted to move on to this next part, which is the fraudsters out there. Now, let me make it very clear that John and I are speaking from opinion and are not advising people on real estate. It's legal that we must say that at some point in this video. Unfortunately, you can do the research for yourself and you'll see that we're not incorrect. But there are a lot of fraudsters in this industry. So there was a recent Canadian Real Estate Wealth Expo in Toronto where a whole bunch of American real estate entrepreneurs were coming up to Canada and telling us all about how great our system is.
It's funny, it used to be the opposite way. We going down to the United States and look what the bubble happened there. Now they're coming here because the bubble is here.
Yeah, and there's 15,000 people there, all glassy-eyed in their suits, middle class, upper middle class, going, oh wow, let's see what we can buy, let's see what we can invest in. And they are being played for chump meat, as a recent article in Zero Hedge kind of goes into it, where a man went to this expo as a joke and then came out of it saying, wow, we are on the precipice of a cliff. And what he saw was incredible. He goes into it. Realtors in Toronto are telling people to pool their money and borrow from friends and families, so get loans, end up in debt. And then they claim it's going to perpetually go up in value. The values of these homes are just going to go up forever. We
talked about it at the start.
They pretext it simply at the very beginning, apparently, of the expo, saying, well, it can't go up forever, but then just followed by, it will go up forever. And it's just irresponsible. And then they go into the fact that they're endorsing leveraging and negative equity, which we kind of touched on slightly at the beginning. So
one thing that they haven't touched upon is also what I've seen a lot of here in Canada. I've seen it in the United States on commercials. It's called reverse mortgage, which basically means that you... nothing like that.
They're
so
in this... Yeah, okay, go ahead.
What happened with a reverse mortgage? This is the insanity. So let's say that, your parents retired and they paid off all the debt on their house. They didn't save up enough money. They just do a reverse mortgage. So instead of, being debt free, they just go into debt on their house.
Yeah.
And that's what a reverse mortgage is you don't have a mortgage on your house anymore, but then you go back into a mortgage. You basically borrow off of the current value of your house. That's insane.
Yeah. Well, and on top of that, we recently reported on how Goldman Sachs was selling $5.7 billion in bad mortgages through collateralized
they
debt
bought them.
applications.
They bought them, right? So like now they're going to just package them into these packages and sell them to stupid pension funds and investors everywhere. And as you can see in the video, we show how in Norway these the Terra funds
back in 2008
funds there was a whole bunch of different funds that had these collateralized debt obligations in them, and poof, it said, and the RMs went bankrupt in Norway.
Yeah, and it's terrible because it affects so many people. And now I wanted to ask you, John, so the question is, and I think a lot of people are wondering, when the term is up, what happens when these loans are called?
Well, and especially what will happen when these loans are called is that, when the term is up, you got to refinance and you can't afford it. That's what happened. Remember, all these subprime loans that they borrowed in the United States that caused the bubble of the, all these derivatives. That what happened there was that they had to refinance after a certain period of time after the term was up on the mortgage, and then of course they couldn't afford anything. They didn't have the money to be able to afford to renew their mortgage anymore. So what happened is you're going to have a massive default happening.
Well, and following that question, John, people have been claiming, of course, for many years, decades really, that this collapse is going to happen in Canada. And for our viewers, why has it taken so long? A lot of people don't understand why it's gone on so long, and I think it mimics a lot of what happens in the monetary system where the fundamentals are off the table due to manipulation. But can you kind of go into why? Because we get a lot of comments on our videos when we talk about this housing market bubble about why hasn't this happened yet? People were talking about this back in 1992 or whatever. Can you kind of go into that?
Well, we've seen several bubbles in Canadian real estate over time. If you look at them now, I don't have the numbers in front of me, but I'm pretty sure there's been several real estate bubbles. For example, what you got to look at when you look at an economy is it well diversified, the economy. So now we're coming back to real estate investing 101, and I learned from some great minds when it comes to this. And I don't really want to touch real estate at all. I'm not that type of guy. But good for the guys that know what they're doing, that are not these people that are getting chumped by realtors. But the thing is, when you are investing in this real estate, you got to understand that, first of all, all these loans that are, getting pushed out, it gets to a point in the economy where it hits a snag where they borrowed out to whoever they can borrow out to that have sufficient credit in order to be able to pay back. Now, the problem is when you run out of people to borrow to, now you got to borrow to people that maybe can't really afford it. And so what happens is, well, now they got to manipulate it. Now they got to go, and go around the laws that the government created, the laws. So they got to go around. They give them 0% mortgages, different type of mortgages that because a lot of people are not going to the banks themselves. They're only looking for the clear and smooth borrowers, of course. But then you have all these other B lenders, as they're called, even C lenders. So basically what they do is they borrow to people that have less and less credit worthiness and that have a high risk of losing money or defaulting on their loans or not being able to afford it. So what happened in the US though was that, as these terms came up, these people had just gotten whacked. Like they got, put in when they shouldn't have been able to afford it at all. And it was a huge fraud when this happened. Now, I don't know to the extent exactly what's going on there, but we've given you some examples. I've seen it firsthand because I also been working in the construction industry. I've seen, exactly what are happening when they borrow money to people that, in my point of view, they're having the same income or less than what me and my wife has. Yeah. And I'm looking at this like, are they willing to live like this? Like they're basically living at a knife's edge, unless they have some hidden capital from somewhere, which I don't think a lot of these people have. They just live, on that debt. And this comes all back to understanding if you want to get into real estate, that's totally fine, but you have to understand how the game works. You have like a lot of these real estate investors, they're not borrowing at houses, at 80 or even 90% loan to value as some of these lenders do, or even 95. They go in and buy a house at maybe 50 or 60% loan to value. So they have a huge gap, a huge loss that they can contain. And they know what they're doing. They know what cash flow is. They know that your house is not an asset until you sell it or until you actually get rental income from it. So it's very important to understand that your house is not an ATM. Don't go and borrow because people believe that, this, it's going to go up forever, so I'm just going to keep on borrowing on top of my house.
Well, it's totally insane. And so many people are misled, especially by these fraudsters that we kind of went into earlier. But just touching on the more conspiratorial side of this whole issue, the Chinese are buying up massive amounts of property in Vancouver and Toronto. And of course, the government went in and said, here, we've got a few regulations for you. But my question is, how much of this is Chinese government? I mean, there is a huge debt with China, and I feel like they're buying up a lot of land. It's
not just China. It's not just Chinese government. Well, they're buying up a lot of assets all around the world. They're using their hidden sovereign wealth funds. That Norway has their oil fund, and then all these oil countries usually have their own sovereign wealth funds, which is basically a slush fund that they use to buy stuff. And of course, Chinese use it to buy gold and ship it to China. But I do believe that, of course, they're positioning themselves. They're going around the world buying a whole bunch of commodities.
Of course, with gold and silver as well. Yeah,
commodities. They've been investing heavily into oil sands and so on. The real estate market on the more residential housing side, it's not so much government, but of course, they have had Operation Fox Hunt in China, which is chasing corrupt officials hiding money in other countries. And one way they do it is, of course, they buy, houses in Vancouver, Toronto. They bought in Winnipeg. I'll tell you a personal story. So I've been to several of houses around in the new development here called Waverly West. It's a massive development. I came here, it didn't exist. It's crazy how it's grown here in Winnipeg since I came. It has grown
a lot just in a few years.
But what happened is I see different owners every time I go and do the finishing work in this home, and what was interesting was what caught my eye was that it was the same guy every single time that came by, and when I was in the house and did all the things and I showed him how to deal with things. But of course, these owners are, of course, Chinese. Who knows? There might be these corrupt Chinese people trying to launder money and hide it in a hard asset as a real estate, is just to get the money out. They don't want it in China. And of course, there might be citizens. Yeah, they might. But that's the corrupt official side of it, the corrupt government people. But then there's also people from China that just don't want to be in this communist cesspool that China is. Who knows if we're going to get attacked for that, but that's what they are. China. They want to get the money out. And I remember I tried to get Chinese investors to invest in real estate syndicated loans here in Canada, and they had a very, very hard time getting their money out because of this, a little bit before 9/11, they had the $10,000, anti-money laundering scheme where as soon as you hit over $10,000, the banks could freeze that money coming into the country, and it could take months to even be able to get it out of the Canadian bank. So what they did, they had set up organizations that shipped out 10,000 off of, let's say, $2-3 million. So they hid this money. They're trying desperately to get it out of China. And of course, there's corrupt politicians, government people that are trying to hide away and run with the money from China. Totally. But then there's also the other side, as we were talking about, the Chinese government just buying up commodities because they are just printing money on a massive scale in China. Their credit bubble has tripled over just the last 10 years. So they're in here, blowing up real estate prices all around the world.
And it raises some questions.
Yeah.
I mean, really, it raises some questions when the Chinese government is involved in such a thing within Canada, within the United States, within other countries. I think we saw something in the UK housing market. There's a big issue with the Chinese government and Chinese investors.
Well, the Chinese are everywhere because, of course, there's many of them. But second of all is, of course, their government funds want to buy up as much asset as they can. There's a big war in Africa right now. Not war, physical war, but a monetary war. Who can buy up most assets in Africa of China or the United States. Like, it's a huge war there, right?
And I don't think you have to worry too much about people in China getting mad at us for calling their country a communist cesspool, because, I mean, it's so much of a communist cesspool that our videos aren't able to be seen in their country for the most part, unless you're a hacker, because they blacklist most parts of YouTube, I do believe. I think even the whole entirety. I think the only other country that we don't really get our videos into, except for to the hackers, is North Korea, where we've seen one view out of North Korea, and I'm still wondering how that happened.
Well, but it could be Kim Jong-un.
Oh yeah, I'm sure. Yeah, I'm sure. Oh, what's Josh and John up to? But let's kind of go into when it collapses, what's going to happen. Just to finish it off, like, what is actually going to happen, and how are people going to be able to surpass this insanity once it does come crashing down?
First of all, what's going to happen usually is that you would have these homeowners, that thought that they had a home. They will become renters. They would have to walk away from and default on all these loans. And that's what we've seen in the United States. The real estate investors that are smart, we're not talking about these guys that you saw in this fair in Toronto, but we're talking about the smart real estate investors. They know then to buy, condos and condominiums, rent them out, and rental units, and rent them out to people, because that's what's going to happen. You're going to get massive amounts of defaults. Then you're going to have people having to go and rent. But then the problem is it's going to trickle down into the real economy. People are not going to be able to buy anymore. The problem is debt here. And it's also not just the real estate debt. It's, all their private debt that they have, credit cards, other loans that they've taken out, car loan, all these stupid loans. Like, it's all debt that drives this whole thing.
Absolutely.
And what you will see is, they're just going to have a massive default, massive deflationary scenario. And then these banks are going to panic. The central banks are just going to go haywire, panic, and try to print even more money. So you're going to see we have a downturn because of commodity prices. Canada is a huge commodity country, right? So you're going to see the commodity prices, continue to struggle then because we don't have any demand around the world anymore. The economy is slowing down because of deflation, the demographics. So what you're going to see is you're going to see people, of course, default on these loans, and then they're going to sit with nothing, and they're going to be very mad. You can see in Spain and everywhere else where there was real estate bubbles as well that popped because of all this things that happened with debt. It was all driven by debt. So it was all this loans that happened, and you're going to see unemployment skyrocketing. You're going to see unrest, of course. I'm pretty sure. I don't know with Canadians. Canadians are pretty calm, but who knows what's going to happen, right, when things are really going to hit the fan.
Yeah, you don't want to piss off Vancouverites too much. They've got a hidden level of flashing out.
I don't know when it comes to their money. I don't know if they even understand what's going on.
Well, no, of course not. The vast majority doesn't.
Yeah, but when the Vancouver their hockey team loses, then
hey, I was there when that happened, when that riot happened. I was there in Vancouver. Yeah, that was totally ridiculous. But again, media lies to you. There's almost just as many people in Boston jerseys rolling cars over on that day as Vancouver. Don't worry, I wasn't part of the riots. I was the one shaking my head going, let's get the hell out of here. But
so anyways, what we were talking about, what you're going to see is this. That's going to happen. You're going to see rising unemployment. You're going to see massive deflation, and then panic from the central banks, and banks are going to start printing money. But you're going to see a huge collapse in this whole massive debt bubble that we've blown here in Canada. When the United States went like this, Canada just continued straight up. And we can show a chart of it if you can dig it up, Josh. I think it's pretty fine to see it because it's insane.
Well, I hope you can find me
I'll
chart,
find
John.
it for you.
Well, I think the bottom line would be that people have to be vigilant and understand this information, be informed, and when it does come crashing down, I think that major solution is free market level, free monetary level, free voluntary interactions between free individuals. free.
First of all, I think to understand what's upon you, you need to read Rich Dad Poor Dad. That's what changed my life and understanding, and actually brought me down this economic wormhole. I disappeared down it, and I have never come back up. because Robert Kiyosaki is a fantastic real estate investor, but what he knew and what he learned from his rich dad is exactly the reason why we're seeing these bubbles today, and how he's been able to prevent, losing all this money, because he saw all of these things. And it might piss you off, a lot of the things that he's writing, but I think you definitely need to read this book. And I'm going to shamelessly promote the Red Pill Expo, which Robert Kiyosaki is going to speak at. So I think all our Canadian friends that are afraid of real estate prices and what's going to happen need to be down there to see what Robert Kiyosaki has to say.
Bozeman, Montana, June 23rd, 24th. You got to come down there, and we will put an affiliate link up as well for you to check out and join in on the fun and the information and the learning, because it's an experience you won't want to miss. But thanks again, John, for going through all of this. It's been a long video, but I think it's crucial for informing the people. We broke down many different sides of it. Of course, there's always more, and we will continue to update you on all of these subjects as we go on. But until next time, check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated. And of course, check the link below or the address in the description and the comments for Bitcoin, which we will put up on the screen for you to scan as well. So thanks again, John. We'll be back at you with much more. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth,
be the change.